Well, welcome back, my friends. Okay, buying a home is exciting until someone says, what loan are you using and are you pre-approved? Suddenly it feels like the alphabet soup. We got FHA, we got VA, we got USDA. Nowhere at all the grocery store lets us break down the most common mortgages type and when they make sense and when they absolutely do not. Hey, I am Annette Marble, your favorite Key Realty agent in and around Central Ohio. So let's start off with conventional loans. All right, best for someone with strong credit, stable income, and decent savings. These are the standard issues for loans. Typically, you need to have good credit, usually over 620 and up. Down payment can be as low as 3%, but less down means more mortgage insurance. So if you put 20% down, no PMI will be included in that. Boom, you're a winner. So good fit if you've got good solid credit, you want flexibility, or you're buying a primary home, second home, or an investment. Okay, not a great fit if your credit is kind of shaky, you're scraping together the down payment. All right, number 2, we've got FHA loans. These are best for first-time home buyers or their credits, let's call it a work in progress. So lower credit score requirements, down payment as low as 3.5%, and they're more forgiving with past financial hiccups. So FHA would be a good route to go. The catch is PMI insurance lasts for the life expectancy of the loan unless you refinance and then it's forever gone. So a good fit is good credit. If you need credit needs help and you don't have a huge down payment. Not a great fit is you plan to stay in your home for a long term and hate extra monthly costs. That PMI will catch up to you. The home doesn't meet FHA condition requirements. Call me about those. All right, number 3, a VA loan. Best for veterans, active duty military, and eligible spouses. This loan is basically a unicorn. You have 0 down payment, no mortgage insurance, and a very competitive interest rate. A good fit for someone would be if you qualify. First of all, thank you for your service. You want low upfront costs. Not a great fit is if you're not eligible. The rules are rules. All right, number 4, USDA. I always call this the meat loan. Best for buyers in eligible rural or suburban areas. The home has to be located in that area that it is approved for that type of loan. So if you have to make sure that not only you qualify for it, but the home will qualify for it as well. They offer a 0 down payment, lower mortgage insurance costs, that's the PMI, than what the FHA, and then income limit is applicable. The no rural doesn't mean cows in the backyard. Some surprisingly close to city areas do actually qualify. A good fit is your income fits the guidelines. The property is eligible and in an eligible area. And then what is not a great fit if you earn above the income limits or if you want to buy in a dense urban area, you will not qualify for those. All right, number 5, adjustable rate mortgages. Best for short-term homeowners or a strategic planner. Low interest rates, but then it'll adjust after its set period. So like 5, 7, or 10 years. A good fit, if you plan to move or refinance your home, the rates will adjust. If you take your a calculated rate, it's a calculated risk as well. It's not a good fit if you want a predictable payments. The rate increases would actually cause some financial stress. Number 6, a fixed rate mortgages. Best for people who like to sleep and have, security and stability. Interest rates never change, predictable monthly payments, and if you're a good fit, if you're staying long term, and you like consistency, this would be a good fit. So what is not a great fit if you're planning to move quickly and want the lowest short-term rate. So keep that in mind. Here's the truth. The truth is no one-size-fits-all mortgage. The best loans depends on you, your credit, your income, your goals, and how long you plan to stay in your home. The wrong loan can cost you just thousands, and the right one can set you up for long-term success. Money, 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 money. All right, if you're thinking about buying and want to figure out which loan will actually work for you and fits for you in your situation, reach out. I'll help connect you with some mortgage companies, and we can avoid mistakes and get you into the home with the right loan. And it's mortgage. The mortgage is low down, so scary banks jargon, no smoke, no mirrors. If this helps you even a little, do me a solid, like my video, subscribe to my channel, and follow along so you don't miss the next one. So if you got questions or really want to make a move, click that link in my description and connect with me directly. I've got you covered from just looking to where do I sign. And as always, we're in and around Central Ohio, and we're keeping it real here in Real Estate with Annette Marble. Mo's back there somewhere, an associate. See you in the next video.